Greetings everyone. This channel is about investing and I've learned a lot over the last many years. I'm just trying to share with you some of the things I've learned. None of this is financial advice, just a YouTuber trying to educate other folks on things I know. As a young person you might say, well, I'm interested in investing, but what do I invest in? And you can spend as much time as you want learning about the stock market, the investing world. The more you learn, the chances are the more you're going to earn. But if you don't want to spend a lot of time, but still gain advantages for investing, what do you do? What do you invest in? So the first thing you need is an account of some kind. You can open a brokerage account with Robinhood or Fidelity or Schwab or Webull. There's lots of different places that you can do that. Chances are you have a retirement account from your work somehow, 401k, and they're going to choose some options for you. But the tickers to know that are very popular, one of them is VOO. It invests in the S&P 500. The Roman numeral V is 5, and then OO. It's kind of a fun little take on the word 500, so you can remember it. VOO is the S&P 500, or VTI is the entire stock market. So VOO spreads you're actually buying 500 stocks when you buy that, and VTI you end up buying thousands, the entire stock market. But VTI, most of it is made up of the same stocks that VOO is in, and there's others like SPY. These are just basically big index funds. They have low fees, they're ETFs, so they have, the tax advantages are better than if you're a mutual fund. So if you just pick putting your funds in something like VOO or VTI, you're going to get the average returns of the stock market over time. So you can just say, hey, I'm going to invest a certain amount of money each paycheck into one of these things, and I'm just going to set it on autopilot. I'm just going to keep buying. And that way you'll get the average return of the stock market over time, which interestingly has averaged about 10% over the past many decades. And it's important to know that, to kind of just trust in this overall slow grind up. So for instance, in my own career, when I first started working, it was right about the year 2001, and it was right when a market crash happened, and it really frightened me out of the stock market. And so the market fell by 50%, but if I had just been buying an S&P 500 index fund, which, by the way, in your 401k system, you're going to have some kind of a equity index fund or something that ties to the S&P 500, and chances are it's the lowest fee item out of all the things you can select. So if you're trying to figure out how to invest in this, there's a lot of target dated funds, and those are fine, but you're going to pay a higher fee for those. Look for the lowest fee item, and chances are that's the S&P 500 index in your fund. So I hired in. The market crash scared me. It kind of recovered about when the housing market happened. Then it crashed again, and then it finally recovered in about 2013. So basically I lived through the lost decade is what they call it. But if I had just been buying the S&P 500 over that time frame, as the stock went down, I would have ended up getting more shares, and then when it would go up, I'd buy a little less, and when it fell again, I'd buy more shares, and eventually everything recovered. And now we've had the past decade, from about 2013 to here it is 2025, a decade of really, really great growth. And so I was frightened because of all these great financial things that happened over my lifetime. But looking back, had I just put more funds, paycheck after paycheck, into the S&P 500, the dollar cost averaging really would have worked for me. Now I'm fine. I understand the markets, and I do great. And this is mainly just advice for younger folks. You're probably going to have 50% crash. Possibly could happen in the near future. You might have a few of those over the course of your lifetime. But just investing in the top 500 companies in America, you're going to get the average performance of the companies in this great country that we live in. And so, what do you invest in? It's really easy. If you just put your funds in VOO or VTI, VTSAX, just over time you'll get the average price. Or if you're in a 401k, somewhere in there they will have something that tracks the same thing as the S&P 500. I think they don't call them S&P 500 funds all the time because the S&P 500 is a trademark name through Standard & Poor's, but they all have things that try to track that. So there's kind of a simple thing. Just put your funds, if you're just trying to get some investment return from your paycheck, you don't want to think about investing, just buy the S&P 500, set it on autopilot, and over the years just let that continue, and you'll get the average results, investing results of the S&P 500, which has been about 10% over the past 100 years or so. So as an easy thing to do to get on your investment journey, and so I thought I'd pass that information on as some education that I've learned over the years. So give me a like, give me a thumbs up. Hopefully this helps something, teaches you something new, and we'll see you. Bye.